guys, welcome back. Another week of Mortgage Matters in Minutes, which is our segment here that we put on from mortgage specialists to give you education of what's going on with rules, guidelines, the industry, and everything of such. So today, it's the first day of October, October 1st, start of fourth quarter 2024. So we're going to give you an October update here. We did a little bit of an interest rate update a few weeks back, but rates continue to dip here a little bit. So we wanted to make sure and let people know about that because we're quoting lots of refinances. And when we're quoting refinances, many clients are coming back with, well, I want to wait longer because the Fed is going to be cutting rates more. And let's answer that question right away. The Fed fund rate, which is the Federal Reserve, that's a short-term interest rate. It does not affect long-term mortgage rates directly. Indirectly, it can. But obviously, what the Fed's trying to do is same thing that the mortgage market's trying to do is put the correct rate in based on what's going on with the entire U.S. economy, whether it's inflation or unemployment, retail sales, jobs, starts, new company starts, new builds, new constructions, all the different financial pieces that the entire market looks at. So the reason we want to get you guys an update here today is because we're seeing with rates dropping, not as many people are aware of it. They have heard through the news and media that the Fed fund rate has cut. They assume that's a direct correlation. It's just going to happen overnight. But in doing this for over 25 years, we've always seen that the mortgage-backed security market beats the announcement of the Fed. And then what happens is the stock market reacts and we figure out, was it the right enough cut? Was it the wrong amount? And interest rates can still fluctuate up and down. If you look at the trading just after the Fed met, interest rates actually ticked up a little bit. But we're seeing them still staying pretty flat here. The trading's been pretty normal. And rates on a 30-year loan, generally speaking, somewhere between 6 to 6.5, with an APR generally about an 8 to a quarter above that. So that's where we're looking at APR, probably 6.25 to 6.75 for where rates are at. Where if you look at just a month or 2 months ago, rates were in the mid to upper sevens. So some people's loans that we've done in the last couple of years are due to be refinanced. And I think what I can suggest to you is be prepared. Don't just assume that interest rates are going to continue to come down at a drastic pace. While we want that to happen emotionally, that's not always how interest rates work. They generally come down, stay flat, wait a while, maybe come down, go back up. It's a moving target, and we don't know what's going to happen next because we don't have access to all the information of job starts. And what I also want to put a big twist into things is what happens if something happens internationally and a war breaks out. Not saying that we're planning on one, predicting one, but if these things change, it affects all financial markets and that could impact mortgage rates directly. So don't be lazy. Get your paperwork together. Know where your passwords are at. Have your pay stubs readily available. Know where your bank statement's at, driver's license, W-2s, because I think that's the biggest thing that scares clients is actually just putting together the paperwork and the steps to be able to save money. And if you can save money now, I tell most clients take advantage of it. We always calculate what the cost is going to be in the loan in relationship to what the savings is. Then we analyze, okay, how long does that take to break even? Basically, how much time do I need for that cost to make sense? And if we're looking at less than a year or two, I would say always take advantage of the savings now. Yes, will rates drop? Sure. But if they drop far enough yet again, we could look at refinancing a second time. And I think that's the wave we are going to see with the mortgage market and mortgage interest rates is that we're not going to quickly drop from 7.5 down to low fives. Just not going to happen. We don't see that. It's never really done that. Rates always go up much quicker than they come back down, always. And you can look at that through trading and the history of time, because the only time we've seen massive decreases was obviously during the pandemic when the government was pushing funds into the market to lower interest rates. So what else is happening with lower interest rates? Housing is getting more and more of a buyer's side real estate market, meaning the buyer has a little bit more control of the offer price, getting closing costs paid, maybe getting in a contingency even accepted, saying, hey, I want to buy your house, but mine needs to sell still as well. And those things are happening. We're seeing closing costs getting accepted on contracts. We're seeing prices of homes dip just a little bit, nothing drastic. If an agent and a seller prices a house out accurately based on what the market is, you will never see a drop. You'll never see a dip. It's already built in, and people are wanting it to be listed at say 300,000 and then drop it to 290 or 280. Well, if they come in right away and price it at 290 and 280, that's going to get picked up and purchased because it's priced accurately. The market always knows. The buyers know what they're looking at and what they get for their bang for their buck. So if you price it correctly, it's going to sell. And that's how the housing market is going. With lower interest rates, we should see a lot more activity. I just don't think the consumer right now feels it. I think they feel it, the pinch at the grocery store, the gas, everything else that costs money, not knowing yet that interest rates have come down. But with the interest rates coming down, soon enough, people are going to find out and are going to be back in the market, which is going to drive up competition yet again of people out in the market wanting to buy. And we're going to see multiple people competing against each other. So if you have the ability to qualify now, I always say do it now. And this is not a sales technique, it's not a pressure. We've seen this over and over with our clients, which we told them a year ago, 18 months ago. If you can go back to our videos, we said buy now, refinance later if it works. And it has. Rates have come down and people have refinanced, and we're seeing a lot of activity of that going on right now. So you can also track interest rates. Go to the only reliable site that we send our clients to. If you type into Google Freddie Mac, PMMS, Freddie Mac does a great job of calling across the country and asking what each lender has for their best terms, and they average that rate out. If you go to a website, there's always going to be games played between lender and lender of saying, we can get you this rate or that rate. They don't always disclose what closing costs are going to be, what you need to qualify for those scenarios. So don't get caught up. And I've had clients saying that they've seen rates in the fours and the low fives. And generally speaking, that's not the case. But yes, are there loans that you can get done there? Sure. But there might be extra closing costs. It might be a different kind of loan you don't qualify for. There's lots of catches there. It's not everyone gets the exact same interest rate. It depends if you're buying a house, refinancing a house, pulling cash out of your property. There's many different scenarios that happen to price out different interest rates. Hopefully you gained a little bit of knowledge here coming forward into fourth quarter. Rates are great. Take advantage of them now. Refinance now. Get organized. Stay on top of your finances. When you refinance, you get to skip a payment. So right now, with the holidays coming, if things are tight, let's take the savings and hopefully continue to see rates drop. And maybe in another year from now, you'll be refinancing yet again. I hope you gained a little bit of knowledge here on our weekly Mortgage Matters in Minutes and our monthly update in regards to the market and what we feel and see going on and where interest rates are currently at. We're always a phone call away. You can give us a shout at 402-991-5153. Like and comment below. We're getting lots of activity there, lots of questions, which is great. We love to help consumers answer anything that they might have. And you can check us out on our website at mtg-specialist.com. Have a great week, everyone. We'll see you here next time. Mortgage Specialists. Driven, trusted, reliable.